ASML sells high-end semiconductor manufacturing equipment, and some of its largest customers include Taiwan Semiconductor Manufacturing and Intel. ASML stock price has been caught up in this storm of late, and it's down closer to $700 a share from over $1,000 a share. But is it that a buying opportunity for long-term investors? Should long-term investors buy ASML stock here at around $700 a share? I'll answer that question in this video. But before I answer the question, I'll evaluate the company's longer-term revenue growth history, its operating profit margin, its return on investor capital, and I'll share with you my valuation using the discounted cash flow model of what I think a fair price is for ASML stock. And finally, I'll update my recommendation and let you know if I think it's a buy here at these prices. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Starting with an evaluation of ASML's revenue growth history over the previous decade. Now, one thing to note with semiconductor companies is they are cyclical. The semiconductor business cycle goes up and down, and recently the semiconductor cycle is expanding, driven by high demand for accelerated computing products that help facilitate some of these large language models and artificial intelligence. ASML is benefiting from that. Its revenue growth in the latest quarter came in at 27%, and management expects a strong year in 2025. Over the last decade, ASML's revenue growth has led to expanding operating profit margins, most recently at 32% over a trailing 12-month period. In the introduction of the video, I talked about ASML selling the highest-end semiconductor manufacturing equipment, and arguably, its technology is so far advanced that it's the only one selling at that level. And when you have a product that's that far ahead of the competition, with difficulty in replicating your success, it allows you to generate premium margins, which ASML is commanding. And I expect they will be able to continue commanding these types of premium margins for the foreseeable future. Now, they will face headwinds. All of these geopolitical tensions, regulations, export controls, import controls, all of that is bad news for ASML. So there will be headwinds in the near term as it grapples with these changes. But that's another opportunity for a company like ASML to exercise its pricing power. If it should have to pay higher costs for inputs into its machines or higher costs to export its machines, it can absorb those by asking its buyers to pay higher prices. Its buyers will not have another option. If they want this latest generation equipment, they will have to pay ASML that higher price. And they'll be willing to do that because companies like Taiwan Semiconductor are experiencing booming demand. Taiwan Semiconductor is selling its manufacturing services to companies like NVIDIA and Apple, which are seeing their businesses boom. And so they will be interested in paying for this technology. So if you're going backwards in the supply chain for artificial intelligence, you're looking at a company like ChatGPT with its large language model. ChatGPT built its large language model primarily by using NVIDIA GPUs, NVIDIA technology. NVIDIA designs its semiconductors, which are then manufactured by Taiwan Semiconductor Manufacturing Company. Well, Taiwan Semiconductor Manufacturing Company buys its machines, the highest end machines, one of them, those machines that cost hundreds of millions of dollars each, it buys them from ASML. So if you're working backwards in the supply chain, ASML is one of the bigger companies in that end, in that supply chain. So if you're bullish on the growth of artificial intelligence over the next decade, ASML is likely to participate in that growth and generate healthy margins in the process. Returns on investor capital have been excellent for ASML. This recent cyclical downturn has closed or reversed and is now moving back higher. That was great to see at 38.27%. Now, I always say when you look at the return on investor capital, it's good to compare it with the weighted average cost of capital, which I've done here. For ASML, the weighted average cost of capital I computed was 10%. So the ROIC to WACC ratio is over 3 to 1, which is a really strong ratio. That's good for long-term investors. I also calculated an intrinsic value per share for ASML at $770 a share, and that compares favorably to the $715 the current market price for the stock is trading for today. By the way, if you want access to this spreadsheet, you could join my channel as a member at the investor tier. Additionally, when I looked at the company's forward price to earnings ratio at 24, it's near the lowest it's been going back 3 years. So whether I look at this company on the discounted cash flow basis to find the intrinsic value per share, that looks undervalued. Whether I look at the company on a forward price to earnings basis at 24, that looks undervalued. So regardless of how I approach the valuation, it looks cheap. There is a reason for that. Of course, the heightened risks because of all of these geopolitical tensions and how it's already impacting some of ASML's customers, one of them being Intel. You probably heard the news that Intel was pausing construction on several of its manufacturing facilities, which it had announced it was going to be buying ASML's equipment to go into those facilities. So they're pausing them, and it wouldn't surprise me if they cancel some of these build outs. If there's some dramatic changes at Intel, that wouldn't surprise me at all. Intel has allocated so much capital to this restructuring of the business and the CEOs being replaced. All of that uncertainty wouldn't surprise me if they just pause spending and try and figure things out there rather than spending more money trying to build out the business. So there are heightened and elevated risks here for ASML, but it's nothing that the company has not dealt with before. It has experience in dealing with these geopolitical tensions, in working with some of its customers that struggle in the near term because its products cost hundreds of millions of dollars. It has relatively few but big customers, and so it has closer relationships to its customers than most businesses do. I'm reasonably confident it'll be able to navigate these waters effectively. So, to answer the question I posed in the headline, is this dip in price a buying opportunity? I would say yes. So I'll update my buy recommendation for ASML stock again here today, March 6th, and remind everyone that I still like ASML stock for the long term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.